नमस्कार एवरीवन। मैं हूं सीए निशा शर्मा एंड हम इस चैनल पर डिस्कस करते हैं वेरियस इनकम टैक्स प्रोविजंस, अमेंडमेंट्स, बजट चेंजेस एंड नाउ वी आर ऑन टू द मिशन ऑफ डिस्कसिंग changes introduced in Income Tax Act 1961 in form of Income Tax Act 2025, which is going to be effective from 1st April 2026. Till the date, we have discussed various chapters like changes in salary, income from house property, carry forward of losses, clubbing provisions, unexplained incomes, assets, expenditure, etc., along with residential status provisions. And today we are going to discuss about changes in capital gain. Before starting this video, I would just want to make a request from you all that if you genuinely like the efforts, because so much efforts have been put in while making these videos and while making the backend preparations, kindly like the video and subscribe the channel. And I would like to start with this Excel which I have been prepared in order to make the audience understand that what the actual changes are. Let's start the video with great enthusiasm, and I would like to give you the reference of previous sections as well, so that you will be able to recall in your mind that okay, this was the section which was used in Income Tax 1961 and now this has been replaced with the new section of Income Tax Act 2025. So let's start this video. We all know that capital gain का जो chapter है that starts with section 45, which is the chargeability section, and ends with section 55A, that is reference to the valuation officer. Because if we will be going like chapter wise, it would be easier to regain or recall that provisions in our mind. So there were sections. So if you have that memory in your mind, there were sections. Section 45 subsection 1, which was the chargeability section, and talks about that any capital gain or profit arising from the transfer of capital asset effected in the tax year would be chargeable under this hat. That provisions would remain intact. There is no change in that provision, but there were sections 45 1A, which talks about insurance claim received under certain circumstances. There were section 45 1B, which talks about amount and bonus received on ULIP. There was section 45 subsection 2, conversion of capital asset into SIT. 45 2A, which talks about securities held in demat form. 45 3 and 4, which talks about transfer of capital asset by a firm to a partner or by a partner to a firm. And similarly, there were section 45 5, compulsory acquisition, and 5A, transfer of capital asset by individual or HUF under a specified agreement. All these sections have been submerged into section 67. So now there will only be a single section rather than using the subsection 1A, 1B, 2, 2A. There is only one section, that is called section 67, and we will be having subsections, list of subsections along with that section. That you can see section 61 67 subsection 1, section 67 subsection 2 to 5. So all these provisions have been covered in section 67, but all those provisions have been covered in subsections of section 67, and we have 18 subsection to section 67. You can have a reading of Income Tax Act 2025 and you will come to know that points, all these subsections have been given in points over there. So there is no change in the provision. Provisions will remain intact, only the wording is changed. And when I am talking about that language of the act has been changed, that you will only come to know if you will be keeping both the acts in front of you and comparing line by line. Otherwise, if you will be reading it solely Income Tax Act 2025, then you will hardly be able to recognize that what the actual difference is. Okay. Now moving toward the next section, here I want to make a thing clear that rather than going into the depth, rather than reading each and every provisions of this chapter, I would be mentioning only the important sections, because otherwise this video will be very lengthy and it will take a lot of time, and it is a social platform wherein audience does not like to watch lengthy video. So I would be concentrating upon those sections which are important. Okay. Now, all the sections are important, I know that, but because from the point of view of practicability, from the point of view of taxability. So, when we talk about section 47, we all know that section 47 deals with certain transactions which are not regarded as transfer, because the base of capital gain is to determine that whether there is a transfer. If there is a transfer, then it would be attracting the capital gain tax. If that it is not, if it is not transfer, then the question of capital gain tax would not arise under the head capital gain. That section has been replaced with the section 70. Now section 70 would be covering the provisions which are not regarded as transfer, and as you can see on your screen that I have tried to cover all those provisions. Section 70 subsection 1, and it will go like this: A, total or partial partition of HUF; B, transfer by individual or HUF under gift, will or irrevocable trust. Likewise, this we will go like A to Z. So as you can see on the screen that section 70 subsection 1 will be replaced with section 71 and A to Z provisions. Okay. Now moving toward the next section, which was earlier in Income Tax Act 1961 was 48, has been replaced with section 72, and section 48 talked about mode of computation of capital gain, wherein full value of consideration minus expenses minus cost of improvement minus cost of acquisition gives you the capital gain. That formula, that provisions will remain the same, but the section number is changed. Okay, so when I am referring only the section number, it means that there is no change in the provision. I need not to repeat every time that there is no change in the provision. If I am referring only the section numbers, it means that there is a change only in the section numbers. When there will be change in the provisions, when there will be change in the wording, I will be emphasizing over there that yes, there is a change. Now, if we talk about section 50B, which talked about slump sale, that has been replaced with section 77, wherein we will be selling all the undertakings or divisions of an undertaking rather than selling individual assets or individual liabilities. So basically section 50B talked about slump sale, which have now been replaced with section 77. Again, the provisions are same. Section 50C talked about in respect of land or building or both, wherein stamp duty value is greater than 110% of full value of consideration. Your full value of consideration would be SDV, that is stamp duty value on the date of transfer. So basically 50C provisions will remain same, but the section is section 78 now. If we will be moving toward the most important part of capital gain, that is the exemption portion. And now we are well versed, because we are practicing from so many years, that exemption portion is covered under section 54. Now, we all know that section 54 has various subsections: section 54B, 54D, 54EC, 54G, 54F, GA, 54H. So there was one section, and we have subsections with those with that section, which talks about the exemptions in respect of capital gain tax. But now we have different sections that start with section 82 and ends with the section 88. From 82 to 88, these section talks about the various scenarios under which exemptions would be available to the assessee against the capital gain. Series would remain the same from section 54 to 54 GA, and series would remain the same. There is no change in the series, because like earlier the section 54 was profit on sale of property used for residence. Residential flat आपने sale किया है and you have acquired or constructed residential flat again. सीरीज वुड रिमेन द सेम. 82 सेक्शन अब उसको कवर करेगा. 54B आता है उसके बाद तो सेक्शन 83 हो गया. 54D आता है उसके बाद तो सेक्शन 84 हो गया. सेक्शन 54EC आता है तो सेक्शन 85 हो गया. एंड वन थिंग आई वॉन्ट to share with you all, that if you have remembered all the previous sections of Income Tax Act 1961, then it would not be hard, it would not be difficult for you to memorize sections of Income Tax Act 2025, because there is a simple trick that you will start on the back of the mind with the previous section of Income Tax Act 1961, and on the front end you will be memorizing the new sections. So the sequence of sections have not been changed, only the numbering has been changed. And this is the portion where the change finally have been introduced, because we are looking for the changes which have been introduced in Income Tax Act 2025. So there are two such sections wherein changes have been introduced: section 82 and 85, previous section, section 54 and 54 EC. Now let's talk that what are the changes. The changes are the words used under new section. जो आपका new section है उसमें जो word use किया गया है, that is long term capital gain from transfer of residential house property, instead of gain from transfer of long-term capital asset being residential house property. Now the word long-term capital asset is made capital asset, but the word gain has been replaced with long-term capital gain arising from transfer of capital asset. Now the question arises that what is the reason of such change? Firstly, there were certain judicial pronouncement wherein capital gain arising out of transfer of long-term capital asset, even though that was deemed to be short-term capital gain as per the provisions of the relevant section, has been allowed for exemption. For example, there was a section, section 50, wherein we talk about that if any depreciable asset has been transferred, the capital gain, the resulting capital gain would be short-term capital gain. But the assessee has claimed that thou the capital gain has been arisen out of transfer of long-term capital asset, and the word used in section 54 and 54 EC is gain arising, so it would be covering short-term capital gain also. On that basis, exemptions under section 54 and 54 EC had been allowed. Now the government, by inserting the word long-term capital gain, has made it very clear and specific that only the long-term capital gain would be allowed for exemption. So the effect of this change would be that if you would be transferring any of the capital asset, and as per the provision of that relevant section the resultant gain is deemed short-term capital gain, then even you are transferring long-term capital asset, the exemption under section 82 and 85 would not be allowed. So this is the major, or you can say this is the change which have been taken place in these two sections. The other section, section 83, 84, 86, 87, 88, corresponding to previous section 54 B, D, F, G, G, A, those will remain intact. जहां पर वर्ड कैपिटल गेन है वो कैपिटल गेन ही रहा है, लॉन्ग टर्म कैपिटल गेन के साथ रिप्लेस नहीं किया गया. Other provisions of these sections would remain intact. And when we talk about the last section 55A, reference to evaluation officer, the new section is 91. So we can see that capital gain provisions have been covered in section 67 to section 91. With this, I would be taking permission from you all to wind up this video. And if you genuinely feel that this video will help you out in understanding the provisions of Income Tax Act 2025 in a better manner, kindly like the video and subscribe the channel. Till then, keep learning and keep growing with Shriji Tax Solutions. Namaskar.